It is April 4th. Oh, 9th. No redos. And it is a Thursday, I believe. Um, so today I want to talk about, after I review the account, I'll show you what's going on. And I want to talk about when you want to own high quality companies and when you want to buy some junk out there that's on the market, that's publicly traded. So I'm going to talk about that a little bit more after I review the account. I'm sitting at 69,290. If you want to know all the positions, you can just pause the browser at any point here and you can see these are my options that I'm holding at the moment. There's a lot of them. The information is the symbol here. It's a $13 call, right? And this is the expiration on the bottom and how many buys or sells I have. These are my holdings at the moment. Some of the big movers: Apple, $246 today. Main Street Capital, Realty Income, big hit here. I still continue to gain from Realty Income. It was up as much as like 12 or 13% today, 12.5. Up $400. I was up a lot more, like maybe 600 and something. I finished. A total return is 5% already because I averaged down to a price of 57.78. My average price was in the 60s earlier, like high 60s. So 85 shares. I expect this number here that is almost 5,000 at the moment. It was under 4,000. I expect it to go over 8,000 in the next couple years at the latest. So this dividend fund is when I only had 70 shares. Now I have 85. So it'll be about a $20 dividend monthly from this holding, which I'm probably never going to sell. That's a strong statement. Never going to sell for the rest of my life. Hopefully that's true. Hopefully I don't have a reason to sell that. Okay, moving on. Royalty Income. NYMT. These positions in WPC, I've already sold that. I'm going to sell this for 60% profit, $158 profit, plus a dividend of $6. So $164 profit and 50 cents or so. That's going to be nice because I'm continue to deleverage just like I have been in the last week or two. If you want to go back and check out the other video logs, I have been deleveraging into this quote-unquote bull trap, but I've not gone bearish because of reasons I'm going to talk about further in a second. Yeah. So moving on in the account, energy transfer. So a lot of these positions down here I've actually pre-sold already, like ATCO, which is C-SPAN. It used to be traded under the symbol, what was it, SSW. SBRA, this is a healthcare REIT. I've already pre-sold it. Hopefully I collect a dividend somewhere in there. But I'm looking to at least get my money back out of this. My average cost is 15.4 and I'm selling $15 calls. My break-even price on these calls is going to be, I don't know what it is, but 1540, I'm not sure. But I'm getting my money back basically, including the premium. So that's nice. Hopefully there's a dividend in there. I haven't even really checked when they give out their dividends, so I don't know that information. But I'm just happy to be selling a call. If it doesn't go up to $15 and it crashes back down, I'll get to keep the position and collect the premium, so that's fine. It really don't matter. But it's just somewhere where I can take money out, is things that I don't know too much about. And so I'm looking to pull out. So LUV is Southwest Airlines. They had a decent day, 6.3%. Still down 4.8%, which is not as much as I was down earlier. I have reduced this position quite a bit. I only have 50 shares now. I used to have more. And I used to have a call. I sold that for profit as well. So I'm looking to really deleverage here into this. I'm using this opportunity to correct some of the mistakes that I've done and going into this bear market too early. So if you're wondering, here's what the account looks like now. I like this. This is very important here. So as you can see, I have $90,000 of assets. So now my account is holding more assets than ever before. That's right, you heard that right. This account has more assets than ever before, even though it's valued only at nearly $70,000. And if you scroll back, you'll see that my account was valued at, 86 at one point before, like in January, before this whole fiasco happened. So it's worth 70,000, but I have 90,000 worth of assets. So how does that work? Well, a lot of it is on margin. And so you can see here that I still have 23% margin. I talked about trying to get this number down to 25%. So this little rally here has allowed me to do that. And I'm at 23% now, and I'm going to try to get down to even further, right? When I sell WP Carney, I'm going to be going down towards that 20% number. And especially if there's another bull day, I'll reach that 20%, which I'm very happy about. A lot of these positions are turning positive here. One thing that's, well, also Rio Tinto. I really like Rio Tinto. I sold some Rio Tinto though. Like, how many shares did I sell? Where's my history? 10 shares. I've been selling, look. But this is sold at a profit. So 10 shares here, 10 shares, 10 shares. And I only have 50 shares left, and I don't plan on selling them anytime soon. I'm thinking of keep that as my commodity play for the next couple years. I'm almost done. I'm almost finished selling all that I plan on selling. So I also sold a couple silver calls. I think I'm gonna keep those 5 and the 2 that expire in January next year. Also gonna keep this one GDXJ for a little bit. It had a monster day today, so $200 is just from this option. You can see I'm up 72% on that, $328. So I sold one of the contracts at $650 for a profit, and now it's $783. So continuing to profit here, and I'm gonna keep this contract for some time. All right, moving on. What else is there to say? Oh yeah, let's compare the account to the market. So 2.28, if I go to the SPY, it's 1.52, which means yet again beating the market, which is very good for me, and I should be because I'm leveraged. At one point I was crushing the market. I was up 4.15% or $2,800. But I finished a little bit lower than that, so it's fine. Okay, that's it for the account. Let's do this. 23% margin, $90,000, 150 worth of assets. These are all the positions, etc. All right. Now, when do you want to buy high quality stuff? And when you want to buy junk. So first of all, what is junk? Well, it's like beta companies, you know what I mean? Just stuff that doesn't really operate that well, but it goes up when the market's up, and it goes up more than the market. So let's take the example of EXK and Wheaton Precious Metals. All right. So Wheaton Precious Metals kind of a standard. Let's go in here for the silver and gold market right now. It's a very good streaming company. Survives. Well, actually, let's compare. To compare apples to apples, let's compare EXK to Pan American Silver. So Pan American Silver will be like the premier, the high quality company. So if you really believe in the oops, this is not Pan American. Pan American Silver. Sorry about that. Okay, so this is the premier silver company. Is the 5-year chart here. It's up 99%, which is, it's doubled in 5 years. That's great. Can't say that about many other companies, although you can about some. So the year is 37%. All right, 3 months 7 down only 17%. But if you go to EXK, you see how this company's been underperforming, down 48% instead of up 100%. over the last 5 years. I've actually lost a lot of money. 1 year is down 46%, and 3 months down 36%. So even though it's got some life, it's been losing a lot of value. But you do want to buy. So this is not. Oh my gosh, I'm so sorry, guys. Can't type. All right, Endeavor Silver, but it's gonna be similar chart, honestly. Yeah, down. That's why I thought I was looking at EXK, because it's similar. Down 32%, down 43, and down 33. It's the same numbers really. So as you can see here, it's got a little bit of recovery, but not nearly as much as Pan American Silver. And this company will do better than Pan American Silver, okay? So there is a time where you want to buy junk. And these companies do better whenever the underlying asset, whenever the conditions for these type of companies to do well comes into play, okay? So, for example, let's name this condition the silver price. So if the silver price is really high, right? So let's say it goes to $25, $30, $40, then EXK will start outperforming Pan American Silver, all right? Because it's a higher cost producer, etc., etc. But this counts for other companies too. It doesn't make sense just for mining companies. It's other companies too. So I don't know. Let's take a look at real estate. Okay, so royalty income, right? I think it's a gold standard type of company. So this is the performance over the last year, minus 20%, as low as 39. All right. So let's take a look at similar company that I own. Let's go with, oops, not this one. This one's also did pretty well. But WMC, Western Asset Mortgage Capital. Look at it, down 78%, down 70% still from the top here, down 86% at the bottoms. So that's a company that does similar things, yet they got hit extremely hard, right? So, but this company is going to outperform. You see how it went from on the way up, especially when things start to really improve. So 145 to 310. So that's more than doubling, right? So more than 100% increase. And if we go to realty income, let's see. Realty income from the bottom, it's 40, and now it's 57. You see it only went up 20%, right? Instead of 110%, it only goes up 20%, but it also didn't go down as much, right? It's more stable. But if you're really looking for a big turnaround in underlying conditions, that's when you want to own junk. If you don't want to risk anything, just don't buy junk, okay? Oh, sorry, I didn't even show you the. Okay, here we go. Western. So this is realty income. Okay, the year chart. You can see how it went down like as low as 43 and then up 57. It's about 20% increase. And then WMC, you can see here 70% down at the moment, down as low as 86, and then went from 1.46 all the way up to like 310, right? So it doubled, 100% increase. But it's probably going to outperform if the conditions keep improving, right? So that's just how these companies work, and so that's the time to own them. But most of the time, it's not even worth purchasing these companies at all. If you're worried about not being able to time the market correctly, then you're better off just buying the high quality companies, or even better than that, just buy an index associated with the sector that you're trying to trade. And even better than that, buy an all-encompassing index, so you don't have to even trade in between different types of industries. All right, so if you're not a macro trader, okay, just buy the VOO, S&P 500 index, or like some type of global fund. that's recommended by financial advisors, and that's probably your safest bet, right? That's gonna make you some money over time. But if you try to play the game and try to beat the market like I am, you get burned a lot. I got burned quite hard this time around. Back in 2018, I did very well. I played it really well. I outplayed the market quite a bit. This time I went in a little too early and lost my shirt. But my recovery has been fairly strong here, and I think I'm gonna make up a lot of ground as the markets continue to move. Um, Even though I think there's gonna be a further downside into the summer, as I've mentioned in the previous few videos now, I'm not positioned for that entirely because of central banks' intervention and their ability to adjust the measuring stick. Right? What is the measuring stick? Is what we measure the value of all companies by, which is dollars. All right, we measure them in dollars, and the Federal Reserve, the central banks, have the ability to influence these dollars. Okay, so they can stretch or shrink how much an inch is in distance. Right? If you measure yourself at 5'10", 5 foot 10 inches, the Federal Reserve can influence the inches in the feet. So basically, they can stretch. They have the ability to make you look like you're 10 feet tomorrow, right? But you're still really 5'10", right? But they stretch out the inches, okay, or they shrink them, or whatever. They shrink them in this case. Right? If stretch them out, you can all of a sudden become, a 1 foot person, okay, even though you're the same height. So it's very deceiving and confusing, but that's just reality, okay? You need to, if you don't know about inflation, you need to learn it, look it up, look what causes it, etc. Just make sure that you are taking that into account. Inflation's been running at about 2% for the last 20 years or so, and that might change pretty soon. We don't know. There's going to be a crap load of debt out there, which is extremely, deflationary, but yet there are trillions, and I mean trillions, literally, of newly issued digital units that will fight against that force. And the reason I'm positioned like this, and the reason I still want to have some margin, some debt, even though there's more downturn to go, is because I'm anticipating this inflation environment to wipe some of that away, right? Because if the currency unit goes down in value, then the nominal price of assets go up in value, and the amount of debt now has less and less purchasing power, so it kind of melts away, okay? So in an inflationary environment, it pays to have some debt, especially mortgage debt, okay? So that's why a lot of people who have houses have a much easier time accumulating wealth, is because as inflation goes up, the value of their loan goes down by like 2% per year in purchasing power, and hopefully, their assets and their wages increase in nominal value over a long period of time, and that's how people build wealth, through equity there. So just a little tidbit, if you didn't know that, might be helpful for everybody out there to get some mortgage debt if you can afford it, etc. As Mr. Warren Buffett says, it's a great way to short the dollar. All right. So anyways, that's when you want to buy high quality companies at all times or at market tops. And you want to buy really junk companies that you think might survive at market bottoms when it looks like conditions will improve. So I think that's what I wanted to talk about. All right. I think I'll end it right there. I'm almost at 20 minutes. So pretty long episode. I'll probably make another video on Monday. If I get bored, I might make one tomorrow or over the weekend. All right, that's it. Peace out.